QuickBooks Online 2025, the chart of accounts. Get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. Here we are online in our browser searching for that QuickBooks Online test drive, the free sample company file available to everybody, looking for the result that has Intuit.com in the URL because Intuit is the owner of QuickBooks. Choosing the United States version of the software and verifying that we are not a robot. I am not a robot, thank you very much. I'm going to close that first tab because it's not necessary any longer. We're in the sample company file, Craig's Design and Landscaping Service, opening up the major financial statement reports because that's what we do, and we do it every time. Go into the reports on the left-hand side in the standard tab, right-click in the balance sheet to open that link in a new tab, right-click in the P to the L, the profit, the loss, the income statement, opening the link in a new tab. Let's tab it to the middle, and that hamburger needs to be closed. So I have some real estate. I got some room to work. Need some elbow room around here, people. 010124 tab. Oh, that's not a tab. Tab 123125. Selecting the drop down to see it in years, running it to refresh it. We got 24, 25 of the years on a side-by-side basis. We're going to go tab to the right side, closing the ham boogie again in that range. You know it needs to be the same. I'm going to go from 010124 tab 123125. Dropping it down, ultra vase another time to see it in years and running it once again. Noting that there's nothing currently in 2025 except for these random numbers down here for some reason at this point in time, including not having prior presentation transactions. Why? Because we closed our browser, refreshed it, opened it in incognito window, which we recommend you do as well. So we have as close to the same information as possible as we go forward. Let's go to the first tab now, and our focus at this point in time is going to be in that chart of accounts. Remembering when we're thinking about the accounting cycle, we have the underlying kind of components that are kind of like the infrastructure that we have to put together in a similar way as the roads and the baseline stuff, the sidewalks and whatnot, so that we can build on top of that in a city. Similarly, we have that in our accounting system. Once constructed, we can build on it the financial statements constructed from the day-to-day transactions, typically done in the plus button, broken out by the cycle of forms, customer cycles, revenue cycle, or money coming in, ultimately cycle, vendor cycle, expense cycle, money going out cycle, payroll cycle, dealing with payroll, and so on. Before we can get those cycles even going, we have to lay down the foundations. We got to put down the groundwork. Now, you can see those in the lists up top. Within the lists, we have the all lists here, where we have the chart of accounts. That's going to be the number one ground baseline thing that we need. But that is also located, and I more commonly go to it by going to the transactions tab on the left-hand side and then into the chart of the accounts. Now, the chart of accounts kind of fits into this transactions, but notice that the transactions is basically where QuickBooks is putting some of the oddball type of stuff. So within the transactions, they have currently the bank feed information. So instead of calling it banking information tab over here, as it has been, in the past, they're just calling it transactions, which most likely on a day-to-day basis, you will be using the bank feeds most often within here, but calling it transactions allows them to also kind of dump some things like the reconcile tab and the chart of accounts, as well as the recurring transactions. So bottom line, they could move the chart of accounts, possibly, because that's what they do in a web-based software, but it will always be somewhere, and typically, if we can't find it anywhere else, it'll be under the cog up top in the lists. So let's go into that chart of accounts. Let's close up the ham boogie. Now, note that if you start a new company file, QuickBooks will usually give you a baseline type of chart of accounts. And so that's going to give you a list of accounts on which we construct our financial statements using the chart of accounts when we make our normal transactions done with the forms, which are under the plus button. So in order for the forms to record a transaction in accordance with the double entry accounting system, at least two accounts being impacted, with every transaction and therefore with every form, unless the form's not recording any transaction, and having the accounting equation remain in balance, assets equal liabilities and equity, we need the chart of accounts. All right. Now, so when you first get the chart of accounts, if you start up a new company file, QuickBooks the online version doesn't usually distinguish between different types of industries providing different chart of accounts, which you might be used to if you have the desktop version. In other words, in the desktop version, when we started a new company file and we told QuickBooks Desktop, we said, hey, this is the type of industry we are in. We sell inventory, or we don't sell inventory, or I'm a construction business, I'm a restaurant. Then they would actually have a customized chart of accounts more geared to that particular industry. Whereas in the online version, they don't really do that so much. So as we will see in future course or presentations, when we start up a new company file, you will tell the system, hey, this is the industry that I'm in. This is the kind of business that I have. This is the structure, partnership, corporation, S corporation, and whatnot. But those will not typically have the same kind of impact in the default chart of accounts that will be created. Instead, QuickBooks basically making a fairly monstrously large chart of accounts, monstrously large because they're trying to encompass the needs of a whole range of different businesses within that chart of accounts. That means that when you set up a new company file, there might be needing to have more work to customize the chart of accounts. So a couple things to keep in mind. If you're starting QuickBooks Online and you had a chart of accounts from a prior accounting software or possibly from QuickBooks Desktop, then you're possibly going to want to pull in the chart of accounts that you had before into QuickBooks Online as best you can, meaning you might actually kind of basically remove the chart of accounts that's currently in here and try to set up your own chart of accounts that lines up to what you had in the prior accounting system so that you can move forward seamlessly. If you're using QuickBooks Desktop, there might be some tools to more easily pull in that information as you do the setup process, given the fact that QuickBooks Online is trying to get at least small to mid-sized businesses to move into QuickBooks Online from the desktop version. But it's still not a seamless move because you are moving almost basically equivalent to a whole different type of software. QuickBooks Desktop, although owned by the same business, is basically totally different than the QuickBooks Online. Similarly, if you had another software like a Xero or something like that, and you wanted to go to online for whatever reason, QuickBooks Online, you might have to pull in the information from the prior system, and you want to set up your chart of accounts to match that so you can pull in the beginning balances, which we will talk more about when we get to a part of the course or another course or section on starting up the new company file. If you're basically starting from scratch and it's a new business or you're starting a new kind of accounting system within here and you don't already have a chart of accounts, then it's going to give you, again, this monstrous kind of chart of accounts here. So your options then would be either you try to use this chart of accounts as, in essence, your default chart of accounts as you start to post to it, oftentimes posting to it with the use of the bank feeds. In other words, as transactions clear the bank and you pay for things like the phone bill, the utilities, and so on and so forth, you assign those transactions typically to mainly expense type of accounts. And you're going to choose expense type of accounts that have already been basically set up over here and hope that you can find a match. And if you cannot find a match, then you might want to look for something similar and then go into the chart of accounts and just change the name, alter the name to what you prefer so that you don't have multiple accounts with similar names, which will be causing a problem. Or your second option, get rid of this monstrous chart of accounts and basically just create the accounts as you do the transactions, which leads to a more customized type of reports, because then you're only going to have the accounts that you're actually using rather than this big chart of accounts. If you're using the first method and you try to record to the current chart of accounts, because you don't have any idea what the accounts should be, and maybe this will give you an idea. Then after a couple months of operations, you might then go into your chart of accounts, look for the accounts that have activity in them, keep those. The ones that do not have activity in them, you might decide to remove those accounts. And that's another way that you can at least clean up this huge chart of accounts to a smaller kind of contingent of accounts that are actually being used. All right, let's take a quick look at the structure of this thing. We've got the chart of accounts, feedback. We could run a report from here. On the new button, we can import information. So if we're importing accounts from a prior accounting system, we can use the import. We can add a new account here. Also, we might add accounts as we do data input forms. For example, in the plus button, if I'm entering an expense form and I had an expense that I've not seen before, I might add an expense type of account on the fly as we do the data input. Noting that if you're starting a new company file, then of course, the first few months of operations are going to be posting to all new accounts, and you're laying down the foundation, which will make it easier in the future as you repeat, in essence, what you've done in the past. However, if you're starting bookkeeping in a company file already set up or going to working in an accounting department, you're not typically going to be adding new accounts as you go, but instead you're going to see what happened in the past and mirror those same kind of transactions in the future. In other words, the vendors that you are paying, for example, you're not going to create new accounts to post the expenses to. You're going to look where the expenses were posted last time and post to the same account so that you have consistency and comparability from period to period. All right, so then we have the batch items down here. So you could check these items on the right, which gives us our batch transactions up top, make inactive. We can search for our account with the search field, and then we have all and created by you. So that could be nice if you were saying, hey, look, I'm not sure I want to totally delete these accounts, but I basically want to use my own accounts, and we might be able to look at the accounts that were created by us versus not created by us. We have the batch edit tool over here. If I click on that, it's going to allow us to go in here and make the edits more quickly, which is something that you might do when you first set up the file, because again, you might go through this chart of accounts and say, I want to go through quickly and rename these accounts to what I think is more suitable to me. Let's go ahead and cancel that. We can print it. We have the cog button. This is going to show us basically how the headers here are formatted. You can see that we have the type, the detail type, the QuickBooks balance, and the bank balance, and we can include inactive. Now, inactive is, and then we have the number of accounts. I kind of like to see more accounts down here so that when I scroll down, it keeps going on one field as opposed to having to go to the next list of accounts the way it is basically by default. When you have this long accounts, I like to keep on scrolling down that way typically. Now the inactive accounts, note that if you're not using an account and you want to say, hey, look, I don't want the account to be dropping down as a potential account that I could post to because I might mistakenly post to that account, for example, and I don't want it showing up. So for example, when I do a data input form, like an expense form, and I go in to enter the accounts down here into a category, which is the chart of accounts, then I have all of these accounts. What if I don't want all of these accounts basically to show up? Well, you could say maybe I should delete an account so it doesn't show up in there. It'll be easier for me to search through the chart of accounts as I do data input. However, if there's already data that's been recorded to an account, I can't really delete it because then it would mess up my financial statements that have already been created. So in that case, it would make sense to have the inactive account so that you can make it inactive, so that it'll preserve anything that was posted to it before, but hopefully not show up in an active position as we're doing transactions in the current and future time frames. Now, when you first start up the company file, it would be nice if they allowed you to delete the accounts before there's anything in them, because you'd rather just not have them. You might not be able to do that. You might only be able to make them basically inactive. So we have the name, we have the account type. So if you want to see the inactive accounts to possibly make them active again, that's when you would go into this one, clicking it off so you can see the inactive accounts. Otherwise, they won't be there because that's the point of making them inactive. We don't want them in the way. All right, so then we have the name, the account type, the detail type, the QuickBooks balance, the bank balance, and then notice we have the register over here, and in the dropdown, we can edit the account. So that means if we want to change the name or something like that, we can go into the edit field, and here's the data input that we typically see when we add a new account, for example, closing that out. And then we can make it inactive. So this is the one that makes it inactive. So it will no longer show up here unless we show to view the inactive ones, and we can run a report from here as well. So if we wanted to do something to these multiple accounts, like make them all inactive, which you might do, for example, when you start the company file, make them inactive so that you can create your own chart of accounts. You can collect multiple of them, making them inactive at one time. All right. You can also sort them by name by clicking the item up top, sort them by name, sort them by account type, detail type, but by default, they will be sorted by type. And that makes sense for the most part. So instead of seeing your accounts in alphabetical order, we typically want to see them in order by basically balance sheet on top of the income statement. So on the chart of accounts, let's go to the balance sheet. I'm going to say just hide. Notice what we have here: assets, liabilities, and equity. That's the balance sheet on top of the income statement, which is going to be income and expenses. You can think of it. But then we have specific type of expenses like cost of goods sold. That's basically how we're categorized over here: assets, liabilities, equity, then income and expenses. But then we get beyond that and we get into the subcategories. So if I go into the subcategories, for example, we have current assets, which is a general subcategory. And then within current assets, we've got the bank accounts. So that's going to be the first one here, bank accounts. They need their own subcategory, not for reporting purpose needs typically, because you would normally just report them under other current asset or cash and cash equivalents, but because they can connect to the bank feeds. So you can see this little indication says that they can connect to the bank feeds. Then you have accounts receivable has its own little subcategory. And that's weird for reporting purposes, but it makes sense from an internal workings purpose because the accounts receivable are going to need a subledger of tracking the receivables by who owes you the money, by customer. That means it's going to have not only be in other or current assets like it would on a normal financial statement, but have its own category of accounts receivable so QuickBooks can assign that special functionality. All other current assets are going to be labeled other current asset, which is the default asset account if they're not having a special need and they're current assets. Then we have the property, plant, and equipment, which QuickBooks called fixed asset type of accounts, which you can see here. And that's going to be the things that are going to be, you might call them depreciable assets, which will have a subledger. But oftentimes in the United States, that subledger will be maintained in tax software because we have to track the subledger for income taxes using income tax laws anyways. And therefore, if we have to track them for internal bookkeeping purposes, it would be nice if we can use the same software for both of those two things. So we'll talk more about that later. Then we get to the liabilities, starting with accounts payable. So you can see that on the balance sheet. That would be the next category, liabilities. Boom. We've got the current liabilities, and accounts payable is a subcategory of the current liabilities, which needs its own special categorization because it's going to need to track the accounts payable by vendor if you're using accounts payable, which you would only do if you're using an accrual component. The MasterCard, this is going to be the credit cards over here, has its own category, own account type. And that's because the credit cards can be connected to the bank in a similar fashion as the bank feeds. And therefore it needs that special functionality, as you can see with the little arrows. And then we have the other current assets. These are, current liabilities. These are all other liabilities that are current that don't have a special need like connecting to the bank for the credit cards or accounts payable subledger. And then you've got the long-term liabilities. These are liabilities that are going to be due not within a year, after a year, which usually will be like a form of loans payable. And that's going to be here in its own subcategory here. And then we have the equity. So the equity is going to be representing the part of the balance sheet that is attributable to the owner. So it's assets equal liabilities plus equity. Liabilities and equity represent the flip side of the coin of the assets. Assets, what the company has. Liabilities being the assets that are owed to third parties like the bank. Equity being the form of the amount of the assets that are attributable to the owners. The equity account types can be different based on industry, such as sole proprietorship, one owner, partnership, multiple owners, corporation, multiple owners, but broken out by shareholders. So that means that they're all going to have this account that'll be like retained earnings, which is the name that you would normally have for a corporation, but that's the default name QuickBooks will usually give. If you're a sole proprietorship, you might rename that account to like owner's equity or something like that. This is going to be a special account because it's the account that QuickBooks will roll in net income to. So in other words, net income will give, this isn't really an account, net income. QuickBooks is trying to tie together the balance sheet and the income statement, showing you the net income in 2024 and then rolling that amount into retained earnings. That's basically the closing process. That means this is going to be a special kind of account showing the accumulation of revenue that has not yet been distributed in the form of draws if a sole proprietorship or a partnership, or dividends if a corporation. We'll talk more about that when we get to the balance sheet. And then we have the income statement accounts. On the income statement, you have most basically income and expenses. Now, if you're a small business, you might not have much going on in the balance sheet. You might basically have a checking account and basically some assets, some fixed assets possibly, and then your equity account. And then the income statement is where the action happens. And on the income statement, oftentimes you might not have that many income accounts because you do one thing to generate income. If you're a landscaper, you might just call it landscaping income, right? You might, if you sell stuff, you might just call it sales, right? If you're a restaurant, you might just call it restaurant income, service income, one basically income account. Or you could have multiple income accounts, but what you don't want to do typically is have a separate income account for every customer. That's usually not good because it's going to make a really long income statement. And if you track your income with income forms, you should be able to get that added detail using sub-ledger accounts, using sub-accounts or sub-ledger reports. You also might have a tendency to want to break out an income account by item. Every inventory item you sell and service item having another income account for, which again, you don't typically want to do because that would be too tedious on the income statement, but instead summarize the income statement accounts and then have sub-ledger accounts breaking out the income by what you sell as well as who you sell it to. So this one has fairly many income accounts, more than possibly normally would be the case. And then we have cost of goods sold, which would only be an account that would be used if you actually sell inventory. So if you don't sell inventory, you're not going to have cost of goods sold because it represents the selling of the expense related to the consumption of the inventory in order to generate revenue. And if you do sell inventory, you have to think about, are you on a perpetual inventory system or not? And that will be more or less complicated. We'll talk more about that as we go. Most of the time, the most flexibility we're going to be dealing with any type of business, small to large, is on the expense side of things, because that's where the largest number of accounts typically are. And that's where you have the most variant and most decision-making potential in terms of how you're going to treat the expenses. And your general idea with the expenses, if I go to the income statement over here, is going to be, do I want to have more expense categories, which is going to give me more detail? but it leads to a longer, more complex financial statement? Or do I want to have less expense categories, grouping things together, giving me less detail, but making the data input easier and the report simpler to read? If we add more detail, we have the added possibility of adding sub-accounts. So the sub-accounts, as you can see, is going to give me another little drop down over here. So for example, here's all of my expenses. All of these are categorized under expense categories, this triangle being constructed by category of expense. And then you've got these arrows that we constructed by making a subcategory so that it has its own little subcategory, so that I could make a summarized report, which would collapse these together into one account, but also give a more detailed report to break them out into more detail. These sub-accounts give us a little bit more detail for us to kind of format our financial statements in an order that we might want to do. Because note, if we don't use account numbers, which oftentimes people don't do because you can easily mess up your account numbers, then it's going to be ordered within category in alphabetical order as the default, at least. So you can see within expenses, it's then ordered within alphabetical order. And that could be kind of annoying because that might not want to be the order that you want. You might want to have some accounts that are next to each other because they are related, for example, such as fuel being related to maybe car repairs and whatnot. So you might want to have a subcategory making a parent of automobiles and then have everything related to the automobile as a subcategory, allowing you to order your accounts a little bit more simply, as well as have the capacity to expand the report and contrast the report. Now you have to be careful with sub-accounts. Some people love sub-accounts and their report is just, they got sub-accounts all over the place and they add almost way too much detail, right? And then other people, they don't add enough detail and they don't have enough categorization. They might be losing some decision-making capacity because they haven't broken out the information into enough detail. So that's really where a lot of the play is in terms of how you can report this. Now notice QuickBooks will often give you a lot of like sub-accounts in the default breakout of their chart of accounts, possibly more than I think I might use personally. So then again, your question will be, do I want to use QuickBooks default subcategory method, or do I want to basically adjust that to do my own thing? So usually what you're going to do most of the time for small businesses is you might connect to the bank, and then most of your expenses, if you can pay them electronically, you might be able to use the bank feeds to record the transactions to the financial statements, which means they're going to be a decrease to the checking account, and the other side will typically be some type of expense. And then the question is, when I first set up my books, do I want to just use the default categorizations and try to find an expense category that has been given to me by default and just use their default categories as I record transactions into the chart of accounts? If I can't find an expense that I like, maybe I can find one that's similar and adjust it, edit it, and change the name. Or I could remove or delete or make inactive all of the expense categories that they gave me, and then I can make my own custom expense categories that I think are most appropriate as I enter the transactions with the bank feeds, which means that cash will go down and the other side of the transaction will most likely often be going to an expense, and then build my own, chart of accounts as we go, making it more customized and possibly more cleaner from the start, right? So if you use QuickBooks chart of accounts, you're going to have way more accounts than you probably will use. If you do your own accounts, then you'll create just the accounts that you need. If you use QuickBooks accounts and you end up with way more accounts than you actually use, then you might say, within a few months after I have recorded the transactions, I'm going to go back in here and delete the accounts that I'm not using, right, and remove them, and possibly remove the sub accounts if I'm not using, the parent account. Now I have one account in there. All right, so that's the general idea. One other thing I want to point out is that the balance sheet accounts, you'll notice, has a balance in it, right? You have a balance here, and you also have this thing saying register on the right-hand side. But if I go down past the equity section into income, then it just says run report. We no longer see register. Why is that? Well, the register, the first thing you should possibly think of is like your checking account register. If you go into your checking account, you might enter something directly into a register, which might remind you of the old register bank book that you would have in your checking account. So if you're entering increases or decreases to the checking account, this is one way you can go to possibly enter it a little bit faster. You can go into this register. Now, that's one way to think of it. Now, also, whenever you enter a transaction, remember the general idea is that there should be a form related to it, right? You should have a form. So typically, you're going to enter a transaction, look for the appropriate form, enter it with a form, because that's going to give you all the functionality related to that transaction within QuickBooks. But some transactions don't happen all the time, therefore there might not be a form for it, in which case you might then think, well, is cash affected? If cash is affected, I can use the check form or the expense form or the deposit form, which maybe I can enter directly into the check register, because that might be an easy way to enter that form instead of going to the expense form or deposit form, because it would be the same thing, just a little bit faster of a data input. If cash isn't affected, then you usually have to default to a journal entry. But some people don't know debits and credits. So maybe you'd say, well, there's only 2 accounts affected. I don't want to enter a journal entry like this way because I don't know debits and credits. So that's when you might use a form like the register. So if one of the 2 accounts affected is a balance sheet account, you can go into that register possibly. So like if prepaid expenses was impacted, I can go into this register, and then within here, I can enter possibly a journal entry form, basically. But now I can look at it in terms of increases and decreases instead of in the form of debits and credits. It'll still create a journal entry, but I can see it in terms of increases and decreases. So that's what those registers might be appropriate. They're not just in the checking account. They're there for any balance sheet account. They're not there for income statement accounts. Why? Because the income statement accounts are temporary accounts, not permanent accounts. They're only there to record transactions over a time frame and then close out to the balance sheet. So there's no permanent register that's going to be there. So that means that if you want to use the registers to record a transaction, you have to use the side of the transaction that is a balance sheet account. If one side is a balance sheet account, which oftentimes at least one side will be. So that's the general idea of the chart of accounts.